All right, you guys, I'm back with another live stream. So this one is just gonna be a quick one. I hope. Well, it depends on how long it takes me to go through all this topic right here. So I'm gonna just get to it, right? Well, it's gonna be about GameStop, obviously. I know that most of you are gonna be tuning in later on. I'm just gonna start right now. Okay, give me one second. All right, so let's start with the price action, you guys. We know this. We know this chart very well. So tomorrow is gonna be morning. Tomorrow is gonna be morning. Yes. Tomorrow morning is going to be Monday. Sorry, I don't know why I said that. So, and market's gonna be open, right? That, I don't know why. Okay, let's just concentrate on the price for GameStop right here. We are in an extreme fear, and we all know what extreme fear means. That when people are fearful, what do? You buy. Okay. When people are greedy, what do? You sell. Okay. And I mean, it's just that simple. It's just that simple, you guys. So again, like, it's a famous saying from Warren Buffett, from Baron Rockefeller, or whatever, buy when there's blood in the street, even though the blood is your own blood, right? That type of thing. Now, of course, everybody is focusing on the price. When they talk about GameStop, they focus on the price and they say, look at the price, it's terrible. It's a terrible company to own, blah, 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 right? But we all know why they focus on the price. And I want to kind of pivot into kind of why the price went down when the company is actually doing better, right? And it's unexpected, right? Of course, like, for people who know the market structure, they probably know what I'm gonna talk about, and it's in the title of this video or this live stream. It's about market maker, right? Liquidity. This is how they create liquidity, and it's not the sexiest topic to talk about, but I think it's important to understand why things are so distorted, right? And I was watching. So let's get to it. Okay. So this gentleman here, his name is Michael Green. Not quite sure if I know him from somewhere. Probably he's one of the hedge fund guy. Big fund manager, perhaps very famous. Probably, if you look at his bio, let's try to find his bio real quick. Michael Green. No, not CPA. Architect? No, that's not the guy. Maybe fund manager? How about fund manager? Yeah. So if you look at his bio, just to give some credential here to the guy, Michael is a chief strategist and portfolio manager for Simplify Asset Management. Michael has been noted for his work as a market theoretician. I might say this word wrong. And let me see. Financial media participant. Okay, he graduated from the University of Pennsylvania and CFA holder. Not quite sure what that is, but yes, that's the guy. And he had some good points. I'm gonna link this whole video here. Of course, it's 28 minutes, but in this particular one, he kind of explained the market structure based on, or why things are so distorted when, you know, certain funds is down technically, right? So in his opinion, well, it's not his opinion, right? There's a data backing his theory, in that it's due to the mechanical market maker trying to achieve that liquidity, right? To pull liquidity out of the market in order to allocate it to a different type of stock in order to elevate their own asset, right? It's just how it works. Again, it's legal, but it shouldn't be, right? Because again, it's based on pulling liquidity out in and out of a certain stock in order to make themselves whole, right? The role of the market maker is to pull liquidity out of the market. So whether it's to create a distortion, a temporary distortion in order to kind of balance their own portfolio, right? So it's a self-serving entity, but anyway, so I'm gonna let him kind of talk about it and explain a little bit better. And I think let's listen in, and I'll come back.
This is, kind of the deep dive, Euro dollar university sort of stuff that you guys go through all the time on the rates market. But remember how market making works in equities, right? A market maker has to decide that they're going to put up capital in order to facilitate a liquid market in an underlying security, right? They're going to buy when you're trying to sell, they're going to sell when you're trying to buy. They're going to try to capture that spread. The profitability of that investment is a function of how much capital do I have to put up, how frequently do shares trade hands, right? And how volatile is the stock, effectively, how wide is that bid-ask spread, right? When I think about something like Apple or Microsoft, which is give or take 100 times larger than the smallest stocks in the S&P 500 and somewhere around 10,000 times larger than the smallest stocks in the total market index, I can't, as a market maker, put up 10,000 times or 100 times as much capital to make markets in Apple or IBM or Microsoft, right? It's just the volumes are not 100 times higher. The bid ask tends to be even narrower. And so if anything, what I end up doing is shortchanging the capital that gets put to the largest stocks, because I need to effectively raise my return on capital by allowing them to exhibit greater volatility, right? And so what that means is when Vanguard goes to put those types of sums, those much larger sums into the largest stocks, it actually causes them to be affected most by this phenomenon. It's not the tiniest stocks. We do see that when something enters the index. We see all sorts of crazy behavior when things enter the index. Tesla in September of 2020, for example. But overall, what we're actually looking at is a situation in which the largest stocks are the ones that are most systematically distorted to the upside, right? And that, I think, is really the story of 2023, has been this systematic distortion as money has flowed out of active managers, out of hedge funds, out of those who are trying to add value by picking stocks, and into vehicles that are basically just allocating on the basis of market cap. It's led to or contributed to this distortion we have, where the median stock now in the Russell 2000 is down 12%, right? I haven't looked at it today, but it's down 12%, while the NASDAQ's up 40% and the S&P is up somewhere in the neighborhood of 13, 14, right? The largest stocks are up by far the most, right? It makes everybody, effectively look at the market and go, what the heck is going on? And you can make all sorts of fundamental arguments about it, et cetera. But remember, there's also a recursive or a reflexivity component to it, because if Microsoft stock goes up a whole bunch, employees at Microsoft that have received stock options get paid more. They are less worried about getting higher compensation than other firms that are not benefiting from this, right? So it actually lowers Microsoft's costs. It also, because these are options, when you exercise the option, you actually have to pay the underlying to the company, right? This is a newly issued share. It's providing cash flow to these companies as well, which in an environment of increasingly scarce cash and higher interest rates is another benefit that accrues on a fundamental basis, right? And so you're seeing all this type of behavior that, if you treat it as purely mechanical as compared to insight based, makes a heck of a lot more sense, right? People are sitting here, everybody I talk to in the stock market is like, Apple has gone X growth. How could they be trading at 30 or 40 times earnings, right? Like, they told us they're X growth. Like, what in the world is going on? And I think it actually is because the markets are behaving in this mechanical fashion.
Is what's leading the rotation?
So yeah, I hope you understand a little bit more. So what he's saying here is just what I explained before, is that those type of movement, including the movement you see in GameStop, it's totally mechanical. It's just a function of market making, market maker who's trying to push this down in order to inflate their own, balance sheets. Perhaps it's just the way that the market work. So the price action doesn't reflect how the company works at all. And so this is why I said in the beginning of the video, do not focus on the price so much, because that has nothing to do with the company. And again, yes, it's, I always said, if you see a company that is doing better with lower price, what is there to complain about? You're seeing it at the discount in which you could never see. So what? You're gonna buy it on a discount. And, all of the articles out there, they want you to drop this company. Why? They want you to not buy into this company. Why? You have to understand how the game is work, or how the game is rigged, in order to make you a trader rather than an investor. And again, like, investing is a lot better than traders. Yes, if you know how to read charts, if you know how to read all this stuff, guess what? You would have sold up here. See, this is extreme greed right there, right? And you would not have buy into this because until this happened, right? So again, you would have missed out on that run if you're not investing in that company at that time. I did not invest in the company at that time. So again, I did not get to capture, that move as a, like, if you want to be trading in this stock, obviously. But I think it's best to treat this company as a long-term investment, right? And again, like, people would love you to sell right now. Like I told you, I bought around $40 or so, like around here. No, actually May, that's when I added more right here, around here. I had, again, I have to look back too, but I bought around, my cost average is around $40 or so. So yeah, why would I want to sell at a loss at this point? I'm gonna dollar cost average down, because when I bought it at $40 or so, I bought it because I knew it was more valuable to me. I know it's going to be a lot more expensive than that in 10, 15 years or so. So it doesn't bother me that it's coming down here, $12 and 54 cents. And it seems like they're going to try to beat it down even further, which is fine. I mean, look at it. These are the price that it used to have. Price interaction in the historically, it used to be here, and that's before it drops down to, so from $12 down to 84 cents, or no, 87 cents. So can you stomach that? Not many people can. So just be prepared. You might see that again, and you might not. So who knows? All right, guys. Welcome, everybody. I'm just talking, so I'm only going to stay 30 minutes or so. But anyway, back to what I was going to tell you right here. So, of course, we have a downgrade for the U.S. Debt market, right? On Friday or Saturday, there were a shenanigan that happens on the bond market. We've been issuing more bonds, but nobody wants to buy it, so they have to increase the interest in order to entice people to buy into it, right? So Zip Trader is gonna be explaining this much better than I do. So
of course, borrowing hasn't stopped, and now we have to borrow a lot more because we have to pay all of this interest. The U.S. is essentially paying interest-only loans with a credit card, which is a debt spiral that just keeps going and going and going. I know it's considered offensive to politicians to talk about these things, but it is what it is. These are just the facts. Don't shoot the messenger. Moody's goes on to talk about the political situation. Moody's said in a statement that continued political polarization in Congress raises the risk that lawmakers might not be able to find common ground on a plan to slow the decline in debt affordability. This sounds like a no-brainer. Of course, they're not going to be able to find common ground. Moody's said this year's surge in Treasury yields has increased pre-existing pressure on U.S. debt affordability. No shite. Any type of significant policy response that we might be able to see to this declining fiscal strength probably wouldn't happen until 2025. Because of the reality of the political calendar next year. William Foster, a senior vice president at Moody's, told Reuters, "We've been officially downgraded."
So yeah, we've been downgraded. So we'll see how the market interact with how the market's going to be on Monday. So I have a comment here, Big Cliff. Do you believe we're going to be profitable on our next earnings call? Our next GME earnings? Yes. How much profitable? I don't know. I am going to try to see a lot more here, but we'll take a look at it later together on this live stream. So will the chaos ensue? I don't know. Again, the stock market's just going to be acting according to, what Michael Greens is saying here. Market maker, right? It's on what market maker is gonna the price movement is usually based on the market maker. But I don't know what the max pain is, right, for the whole stock market. And for those of you who doesn't know what that is, it just means that when you have the option traders buying for put, buying call, and the volume that is and anytime you buy put, you are betting that an underlying stock, the price will come down, right? And if it comes down, you make money on that buying puts. But if you buy call, you are betting. So every single day, every single month, every single minute, people are betting that the price will go up and down, right? But the market maker, the role of them is to, cause as much pain as possible to retail investor who buy puts and buy call and all that stuff, and to find the sweet spot. And so that sweet spot might be the price that you're seeing every single day, whether, hold on, let me see. Now, GameStop is different because option chain is kind of wacko. But let's look at the SPY. Let's say, most people are betting that the SPY will come down. They will try to push it up in order to, create the maximum pain for retail, meaning losing money, right? And this is how they manipulate the price up and down at will. Now, buying options and all that stuff, usually people use option to hedge your position. They don't use option to bet, on the direction of the stock market. Yes, you could make a lot of money doing it, but you could lose a lot of money doing it as well, because mostly you're going to lose because market maker is going to win. They're not gonna let you, run. It's like a casino, right? The house is always gonna win. So the only way that you could win is to look into a company and hold it, buy it, and hold it for a long term, right? It doesn't have to be GameStop. It does not have to be GameStop. Just a piece of advice or a piece of non-financial advice here. That's something I would do that I found being a trader is a bit stressful. It's too much stress, and investing shouldn't be that stressful. When you find that company to jump into, knowing that company, what are they doing? How do they make money? All of that stuff is going to be like eliminate all of that stress. And the price really doesn't matter. You just chip it away, $5 at a time. Literally, when I started investing in the stock market, I started with $7 a week. And this is before GameStop and all that stuff. I already told you guys that. All right, so let's go with the earnings. Hey, Lionel, welcome. So, I don't know. Again, can I predict that it's going to be profitable? Of course, I know, we've been cutting for a long, long time, right? Cutting down costs, and now we announced that we're not doing any 401k anymore, so that's gonna cut into the bottom line. Add into the bottom line. Whether we're gonna have a stock compensation instead, or whether we're gonna just do a straight up paying employees more per hours because we don't do a 401k match. So that's remained to be seen. I think it's going to be more effective in the January earnings, so to speak. So I don't know. It's tough. It's tough for me to say, but I have faith. I am pretty confident that we could break even at the very least, even if we just earn $1. $1 is a good earning to us already. All right, so let's look at the balance sheets here. Of course, this is macro. I hate it when they do this thing. Okay. Macro Trends website, and I'm going to look at the quarterly report right here, and I want to revisit the balance sheet, because people only focus on the price. They don't really focus on the balance sheets here, and so I want to kind of refresh our memory what GameStop has been doing. Okay. So this is an income statement. Obviously, this is the second quarter, which we did pretty well on the net income basis, right? 2.8. Can we come in flat for the next quarter? If you compare that to the last year of third quarter, we were down $94 million. So net profit down $94 million. So, but if you look at the SG&A right here, boom, compared to that, what is the difference of that? So 3, let's do the math together. Boom, calculator, math. So 387 minus 322. So that's $65 million of cuts from that year. And then if you were to compare second quarter of last year, SG&A, if you compare that to those two, it's kind of similar, right? So it's good to assume that that is the same, right? The same as SG&A as the next quarter. So we could kind of deduce from that, like, or predict that it might be similar. So, so even if we're staying flat on the top revenue right here, meaning that we are going to make around 1.18 million or 1.2 even, that's a lot better too. So we want to aim at $1.2 billion top line revenue, right? And so if you do that, of course, we are going to come up ahead just based on this alone, right? So $65 million, even if we kind of take an account that and everything stay the same, we could kind of come out negative. Hold on, negative. $40, not 40. I think I'm dyslexia. 94 million. So that's negative $28 million, right, so far. But wait. We have interest, right, from our marketable security. From the interest point alone, I think we made like $15 million just on the marketable security alone, right, from last quarter. How do I know that? Well, let's go to the SEC website. Right here. So we want to see how much in interest did we do. I'm showing you this website just in case anybody doesn't know how to get to the document. Lionel, are you there still? Okay. I'm kidding. Okay, so I'm gonna, let me see, I want to look for, this is second quarter, the most recent one, so I want to look for interest, current debt, no. That's income. Operating loss, interest income right there. So $11 million in 3 months, $21 million in 6 months. So let's go with this number. So assuming, wait, hold on. How much marketable security? So right now we have 300 million right there. So did we add some more? I think we add some more last quarter. I mean this quarter right here, second quarter. I think it's 40 million something. Sorry, I should have had this. $40 million. So net loss. I'm looking for. Where did I see that they add more? I think it's probably from here. $43 million was added to the net investment. So I'm assuming that's the same file. That is... Okay, so it used to be 250, right? It used to be 250. They took $1 million out last quarter, and then now they added back more to get to $300 million, right? And so my point is, in showing you that, we saw that they had 11 million. So that 11 million is going to be even more. How much more? So it could possibly be 15 million, give or take, right? So let's assume that from that $300 million in marketable security and treasury bond, short-term treasury bond, they're going to generate $15 million more. So that's going to be adding to this. So now instead of $20 million loss, $28 million loss is going to be $13 million loss. So hopefully, they make more. Even if at $13 million loss, that's not too bad, right? That's assuming that the top line is flat, right? We want them to make more money on top of that. So $16 million, that's not too bad if that is the case. But from Moran's video, we know that we had sold some property in the European sector or section of the part of the world. Perhaps we were closing down store and we did have a lot of money from that. So yes, I think we could be profitable, like for sure. Loop ring is up 50%. No, Jason, don't be pulling my leg. That's insanity. Hold on, let me see. Hold on. I might be a gazillionaire by now. Hold on. No, not 50%. Jason, don't be saying that. Which one are you looking at? Unless this one is a wrong one. Okay, let me see. What the heck? Not even. Okay. No, loop ring is still at 20. I don't know what you're talking about. GME will be profitable every single quarter from here, beating all expectation and yearly profitable. Everybody will be wishing they accumulate at these low levels, at these lows. Okay, worst mistake they have made was constantly smearing Ryan Cohen. He is going to prove them all wrong now. Yeah, of course. I truly believe that. But Jason, I think we need to ground in our own reality a little bit here. I think small incremental change is massive, right? And, we don't want to alert people to jump into this stock until we get to accumulate a whole bunch more first. So I think, people are going to be, yes, I agree that people are going to be so blindsided by this, but I don't think they're gonna let it run too soon because they want to fatigue people out first. My opinion is, because they are able to kind of suppress the price based on the mechanical of the market, they're going to try to do this 4 years. I bet you anything, just like how they were able to do it before the run, right? Again, it's just my opinion. They might not be able to do it at this current environment, but look at how far were they able to push this down, and how long were they able to stretch this out? See what I mean? So if you look at from here to here, what is that? Sorry. Okay, so from the from the high, this is like from $12, okay, to here. That's 1,300 days. 1,300 days, they were able to suppress the price down, and look how flat it's trading from 12 to 80 cents, That's going to be scary for some people who doesn't even really know anything about this stock. And I think they could keep it down. Now, I'm not going to, I don't think they're going to bring it down to 80 cents at this level, but they might be able to keep it around 10 or 15 for a very, very long time, like kind of traded sideways like this. So that's the opportunity for you to accumulate, obviously. But they were able to do this since the end of 2015 all the way up to 21. So that's 5 years worth of nothing, right? Low volume trading and all that stuff, right? So technically they could do the same thing. And if you were to measure from the high, right? So let's see, 1,300, did I say 1,300? Okay, let's speculate real quick. So theoretically, they could drag it to 2026 if you use the same time frame here, from high to high, right? Yeah, so 2026, 3 years from now, in my opinion. What are you guys thinking? From the bottom was okay. It's now his life mission. True. I truly believe that. This is why I jump in the first place, because I researched what Ryan Cohen was doing. Like I didn't even know who Ryan Cohen was. I didn't even know that he was a part of Chewy. Of course, I know what Chewy was, but I didn't know it was because of him, or it was his company that he sold to PetSmart. It will happen probably after yearly proven and dividend. They have no choice. Yeah, but that does take some time though. I think, Ryan Cohen is trying to build a foundation, and, the sustainability of profitability too. So, and depends on how high the profit can he generate for Gamestop. They're gonna have no choice but to flip it, right? To flip it to long eventually. But until then, they're gonna try to drive as many people out of this stock as possible, just like how they do with Bitcoin, right? With crypto. They scare so many people out of crypto, and now they've been accumulating like crazy, and now they're ready to pump it up. And that's why you see all the positive news on the media all of a sudden, talking about XRP, talking about ETH and all of that stuff. They don't seem to bash it anymore. So that's good. And then, okay, what was I talking about? They are the dumb stormtrooper, yes. And also share buyback. Yes, we know that part. Good, we are accumulated as much as possible. Yes. History will repeat. Yes, Lionel. That time frame won't be really based on the fundamental now. True. They cannot stop it. TikTok. Exactly. They will be forced to go long. Yeah. Yeah, I mean, I agree on all of that. But to me, this is my conviction right here. This is how I have the conviction to hold on to the stock. And I kind of wanted people to pivot to this too, because this is how they can't argue anymore, right? They used to say, we burn so much money, we just burn cash, and we don't really know what we're doing and all that stuff. And now they can't argue it. They cannot argue the whole digital narrative too. The fact that we just have our own digital store now, right here, that we could download any game digitally if we wanted to. Just buy it from Gamestop. That Hannah lady was saying that, I could just download it from Steam or whatever. Everything I'm owning is digital. Okay, well, here you go. If you want to do that. And then if you want to argue, okay, why would people want to buy it from GameStop when they could get it at Steam? Well, the reason being is that they have better value. They have, if you are a member, right, you could get 10% off on all of that. And so that's a value creation there. Perhaps, people from the next generation's gonna appreciate it more. People who doesn't know anything about GameStop or used to be scammed, quote unquote, by GameStop, are going to turn around and actually take a honest look at this company right here. And of course, I'm going to be shopping at GameStop. Now I'm looking at, upgrading. Every time I'm upgrading anything, I'm going to the GameStop website. And I'm so glad that they are actually, selling all of this stuff here. Again, I can't spend $4,000, but I could possibly do the 1,001, build for my future upgrade. But right now my computer is relatively new. I just got it maybe 4 years ago, so I'm due for one. Yeah, so that's why I'm so thankful that I get to be in this company as an investor, and also experience the growth of this company too, kind of slow growth, right? Yeah, it's amazing on what they're able to accomplish, and the fact that the media is going after it, it just confirms even more that this company is something to at least take a look at, right? For those of you who doesn't know or who doesn't love GameStop, I implore you to take a closer look at it before you judge that GameStop is just terrible based on some people's opinion, right? And again, make sure you are able to separate between what happened to GameStop 10 years ago to now, 3 years in the making, right? So when Ryan Cohen came in, you have to separate between those leadership, old leadership versus new leadership right now. And regardless whether you hate Ryan Cohen or not, because of the media telling you that he is a failure, take a look at him. Like, go search his name, do your own research. Don't just believe in the media. Because guess what? They used to tell you Elon Musk is a terrible CEO, right? Now, depends on who you are, right? If you are his biggest fan, you're gonna say that he's the best CEO ever for Tesla. My point is that somebody has to believe in him to get Tesla to where it is today. But the media will never tell you that until it's too late already. Right now, they want you to buy Tesla because, I just saw something that reminded me. Motley Fool. I think it's some Tesla is like Tesla and Apple. Hold on, let me show you what I mean. Okay, artificial intelligence stocks, Tesla. Okay. So this is just came out right here. Of course, now they want you to buy into Tesla, right? Saying that, AI is gonna bring a Tesla into a $1 trillion thing. And of course, again, overinflated price. They want you to jump in right now. They don't want you to hold Tesla 10 years ago. They want you to hold Tesla right now at this price. And they always do this to you. So the reason why they hate on GameStop is because it's valuable. Please just take a look at it and be acquainted with the balance sheets of the company and all that stuff. So keep in mind, when they're pushing you something like this, you have to reevaluate, why are they saying that, right? And does it make sense to you at all to buy Tesla at this price point? And they always push the AI, right? AI things. Yes, AI is going to be with us, but is it going to be something that's going to make trillions of dollars when AI is meant to replace people? Okay. So if people have no jobs, who is going to have the money to buy all the AI make thing, right? So it's counterintuitive, to say the least, unless they create some sort of jobs that kind of replace all of the AI job out there, right? But what job are you gonna create? Different industry. Crypto is gonna eliminate all of the administrative works, like the taxes and all that stuff, accountants and all that stuff too. So it's the next kind of evolution, I think, because the whole point of blockchain is to account for the transaction, right? And I think eventually accountant's going to be in trouble. Taxes is going to be automated and all that stuff, and you don't really need tax person at all in order to do your taxes. Okay, let's see. Lionel, yes, I'm all in for the long run. Cool. And you build reward points as well. Yep. And players is going to be massive. Jason, do we know when players gonna come out? And the price are really great. Yep. it's very competitive. Like if you look at the price of games and stuff, you know, what am I? Video games, PC, yeah. So like if you were to look at this particular one, let's look at it together. On any other website. So Amazon, oh, look at this. Hold on one second. So Amazon actually sold it for higher price than GameStop. So yeah, we're pretty competitive with Amazon. You know, and on top of that, you get the discount from being a member too. So yeah, you get the best value for your buck, even as competitive as Amazon, right? So yeah, $80, but you could get it from GameStop at $60. So yeah, I mean, people, you know, you can't get it. Well, it might be because of the Black Friday deal, perhaps, right? And we got an early Black Friday deal, you guys. Come on, like, I mean, our leadership is trying to get people to shop at this store right here, right now, in front of you. You know, he's working hard to get us more customers and all that stuff, and people still complain about it. What the hell? They can't have the best competitive price and even leave matching. Okay, even better price. Yes. Go check out the new GameStop controller. And I have GameStop Bluetooth here, but cool. And they are pretty sweet looking. That's cool. All of the GameStop products, just like they did Tesla. Cool. I think the bottom is $10. IMO, I don't know what that means. Oh, in my opinion, sorry. we might hit it before earnings, and huge bound if earnings are positive. If not, they will stick us in a new channel. Okay. Between $10 to $15 a share. Okay. I appreciate that, Mongol. Migo. Hope I said that right. They will end up flipping long. Yes, I agree. Yes, the controller. Let's see what's going on here. Do they have like a GameStop controller or something? Like a GameStop brand. Sorry, I'm shopping right now, obviously. I know that they have GameStop mouse here. Atrix, right? Is that the GameStop pad here? But I don't see any controller. Hold on, let me see. Might have clicked on the wrong thing. Console, maybe? No. Video game, nope. Game accessory, controller. Yeah, I mean, look, like they have massive amount of like variety of product coming in. You could shop until you drop here. But I don't know how these people, like, of course they have a retro one too. See? Like, you know, something for everybody type thing. Yeah, these are pretty cool. Nintendo, they have this one pre-owned, see? Like, you don't have to force people to buy into pre-owned. You just let them know, hey, you could get a pre-owned one as well. You know, remember the Illuminati lady who was like, oh, you know, they're forcing people to... It's like, no. See, look, all you have to do is just let them know. Pre-owned. Do you want to own it? Why do you have to force the employee to tell them that? It's like, but that was the old leadership, and that's what that's bothers me. Like, that's why people, like, it's so much, of course, like, we all know that was BS, right? But what bothers me is that when people listen to this and who are not into GameStop and want to invest into GameStop, but then they, you know, listen to this big media people, they come in and say, you know, lies about leadership, and they just bring, you know, old leadership into this new leadership, saying that GameStop as a whole is terrible, like without giving Ryan Cohen any chance to improve or any chance to even be a CEO. Again, he's just been a CEO for what? 6 months? Less than 6 months? Not even? You know? And these people expect what? A miracle? Like, remember Michael Parker or Pecker or whatever his name is, the wet bush guy, saying that Ryan Cohen is a failure or whatever. It just doesn't know what he's doing, and that he failed at being Amazon. Okay, come on now. Amazon, okay. He's trying to beat Amazon, right? That's what we want to do. But really, even Amazon cannot be Amazon in 3 years. Amazon is Amazon in what? I think 30 years, right? It takes Amazon 30 years to be Amazon today. And this guy, you know, one Ryan Cohen to beat Amazon in 3 years' time? Come on, like, these people. True. Probably next year soon. Yeah, the player, right? Yeah, I think they're trying to, I hope it's fully functional, you know, when it comes out. See, like, all of this discount and the fact that it's like Black Friday already, right? Let me see. So, I'm sure this deal is going to go on until Thanksgiving. So, yeah. It's going to be cool. Game Informer too, right? Must play and all that stuff. Yeah, we're gonna do fine. And even like the category of pre-owned too. Yeah. High ticket items and all that. PS5. Yeah. Ooh, I want this one. $19? Ooh. Gonna add that. Alright, sorry. I'm shopping right now. Okay, let's go back to the balance sheets. Sorry. I was kind of enamored by the Gamestop website right here. Okay. So, sorry, I don't even know where I'm at right now. Okay. So, based on my analysis on the balance sheets here, not an expert, obviously, just an amateur here. Doesn't even know, how all of these terms kind of add up, but don't place any trade based on this at all. So this is an annual sheets, obviously. So this year, fiscal year, we still have way to go, but it looks like we're already beating the 6 billion mark right here, or close, $5.9 billion mark, and we have 2 more quarters to go. I think people miss that, unless this is like a trailing 12 months. Is this a trailing 12 month, or if not, this is massive, because again, we have 2 more quarters to go. Hold on, let me do a quarterly here, because yeah. All right, so this is 1, 2. Okay, sorry. So this is quarter 4, right? Quarter 1, quarter 2, quarter 3 is coming up. Okay, I think that was a trailing 12 months. So operating income for this particular quarter 2 is $16 million lost there. So, I mean, again, if we come out at $13 million lost, that's still a good run, honestly. So I did this by kind of assuming that we have the same as the SG&A right here, and the revenue is flat from the last year, right? Last year, the same quarter 3. The reason why I assume that the SG&A is the same was from last year quarter as well. See, this quarter is the same as this quarter, so if you carry that over, you're gonna get this same comparison. My prediction is that he's gonna beef up a lot of inventory here on the 3rd quarter. So if you look at the last 3rd quarter of last year, you see the inventory right here, right there. So we increased that inventory from quarter 2 to quarter 4, $500 million right there. No, not 500, sorry. $400 million increase on inventory. So it's not a stretch that we're gonna increase that inventory for this quarter right here. If we do that another time, 500 million too. So what did you guys think? So if that's the case, we increase. What happened to assets? Receivable. $900 million cash on hand. yeah, so why increase the revenue? I mean, inventory. But I wonder where they get that 500 million or 400 million to increase in revenue, inventory from. Perhaps that's why our net cash flow for this one is in the negative, because we did increase our inventory by $300 million. So technically, we would have been able to post a positive right here on this particular quarter, but we beef up the try to beef up the inventory at that time, right? So he could do the same thing here. So if you were to look at it again, see, from 7 to 11, $1.1 billion right there, right? And comprehensive income right here. So it seems like he took from the shareholder equity in order to do that, but only 100 million out of that to beef up the inventory. But if you look at, hold on, this one, 100, this one, 9. Okay, so it could just be around $1 billion, perhaps. I'm just looking at the, quarter 3. See, quarter 3, usually we try to have as much items on hand as possible. So the back in 2020, we only have $800 million worth of inventory. But when Ryan Cohen got in, we immediately increased it third quarter to 1.1 million, the next one over 1.1 billion, of inventory. So it's not much of a stretch that he's going to do the same thing here, because again, we want to, sell as much things as possible. Yeah. So, what is my conclusion? So my conclusion is that it could pose a negative for third quarter, just to again beef up that inventory again in order to sell more items for fourth quarter. Positive? Yeah, that's just my conclusion here. Alright. I think that's all I have for today. An hour already. I was gonna only stay for 45 minutes today. Didn't feel good today, so I have been so tired lately. But I'm very excited for tomorrow trading, you guys, and I appreciate every one of you who joined me. Jason, Lionel, Migo, thank you so much. So I appreciate all of you. So again, don't focus so much on the price action. Doesn't really matter what they're gonna do. I think $10 is on the horizon, so just prepare yourself to see GameStop at that price. I'm sure they're gonna try to smack it down as much as possible before the earnings. But if you look at the fear index right here, it's in the extreme fear, or close to it anyway, fear. And so, what do you do when people are fearful? You buy, no? And then you're gonna see stuff like this. Boom. If it's a good news, obviously. Actually, GameStop has already beat expectation. Look, beat 3 times already. We beat expectation 3 times already, with the exception of this one miss, one beat, right? So it's still a good thing, but for some reason the price coming down. So again, this is a good opportunity for us to accumulate more and more. For people who, and for those of you who still hate on GameStop, I advise you to go and look at the financial position of the company. The balance sheets is important, obviously. This is the value creation right before your eyes. You are in early investor here. It's like if GameStop just IPO, and you get to kind of evaluate it in that way. Okay, I will see you guys tomorrow after work, maybe around 7:30 or so. And I don't know, thank you for information and your time. Thank you so much, Lionel. Appreciate your time too. Okay,